Let's record a new video. Let's go over what the price action was. So let's start with that we are basically still in the same range. You can draw your range from low to high right here because we are overall in a downtrend, or you can pull it from high to low, but in essence it doesn't matter because the high is taken early this week and the low is still untaken. So either if you say this is the range low or this, both are untaken while we are building higher lows with a lot of liquidity. So that's something to keep in mind. And then last week we were around the mid-range and a lot of coins were compressing. So also here we could draw like a trend line where we were making a high, lower high, lower high, lower high. So we kind of had like a pennant building up like this with that compression effect, where I said that the first move could be the fake move. So if we first would go down, then it could potentially be bullish. If we first would go up, that could be bearish, because big players need liquidity to reverse price. So in this case, a lot of liquidity is resting higher. So what the big players see is, okay, if I push price higher, take that range high liquidity, people long here, then you can use that liquidity to reverse price to the other side. And right now it seems like that could be the case, because early in the week we had, or at least Sunday, on Saturday it started already. We had the move up, pretty strong uptrend, people longing into the weekend, which is something that always, or not always, but often happens in the weekend, that the weekend moves are fake moves because a lot of people then become bullish, stuff like that. It's easier to manipulate price, so that's when they push price higher. And then we can see that price took the range highs on Monday. We kind of formed a distribution right here, and then we started moving lower, creating a potential strong weekly high, which is this high created on Monday. And then we moved down yesterday, got a pretty aggressive move up, taking extreme liquidity right here, and then sellers stepped in again, defending that weekly high. So what we have right now is that this high on Monday is a strong weekly high, and then today we made new weekly lows, in which we have a weekly high on Monday, weekly low on Wednesday, in which we know statistics are now leaning towards the bearish side. So let's quickly look at that. Weekly statistics. Low P1 flip risk based on timing, 16% flip risk. So that's pretty low. And then on distance, it's 37. So yeah, that's not too significant to one side. But it's most important is the timing statistics, and it's a 60% flip risk. So very low probability to get a full reversal back to the weekly high. Then if we look at how likely is it that P2 holds, then we can see unlikely that P2 is in. Like 90% of the weeks form a new P2 after Wednesday 1 o'clock, which is our current weekly low. So that shows that it's very likely to make a new weekly low if the weekly high holds. Then on distance statistics, unlikely that P2 is in. 100% of the weeks moved further than min 3.7%. So if we assume that this high holds, which seems likely, then if we have a bearish week, 100% of the weeks see bigger displacement between that high and the current low, which means that based on statistics, it is pretty likely to take out this high and make new weekly lows. So that's interesting to know. Then another fact is that we created supply yesterday with that strong move down. If we also take the fib levels from that high to this low, we can see that it aligns with that supply zone. So until proven otherwise, any retest in this could be a potential short entry. And what I expect is that we take out at least this low, and then tap into this crucial demand, which is demand that must hold. If bulls don't show up right here, then deeper reversals are very likely. So let's quickly zoom out a bit on that view. Like this is demand that caused the imbalances this weekend. If we also look at the volume profile, let's pull it from that high to this low, then we can see that it overlaps with the point of control. And then below that we have the value area low right here, but this is basically all liquidity. So we can start this low, then we have a higher low, higher low, higher low, higher low, higher low, without any significant demand zone in between. So there's nothing really to hold price up except this demand zone right here, baked by the point of control. So what I expect is that we could see price sweep some liquidity into this block, because there's quite a lot of liquidity resting at that point of control and that weekend liquidity. So a sweep could happen, and then you could potentially look for longs back towards this level, where I lean towards a lower high formation, but that's always, you have to see how price develops. But if price or if buyers don't step in right here and price starts closing below that demand zone and a point of control, then I would be looking for any back tests here to still look for shorts and target that value area low at least, and potentially all that sell side liquidity. So yeah, pretty bearish view I have until proven otherwise. Yesterday I was in a small long, closed it for small profits. I was a bit disappointed in myself that I wasn't in any shorts, because I had, in last week's video, I was pre-planning exactly these early fake moves to the upside and then bearish continuation. But I got blinded, so that's the thing. But I said in a tweet, market is always forgiving, there will always be new opportunities. So this morning I entered this short, already took some profits, moved the stop to here, so it's a risk-free position. I can see it go back to the highs, but yeah, it's just a free trade. Not planning to, if we go lower, I plan to take some profits, but main profit is around this local demand zone. Reason for taking this trade is that if we zoom out a bit, like here, that at this point, this was our range. It's called the classic range. Let's delete that to make it a bit more visible. Then if we see here, then this is our former range low, right? So this is the area. If bulls reclaim it, then I would expect price to move into that 114, 150k area for potential lower high. So this whole zone, including this local supply, that's the area where I expected bulls, or at least bears, to step in if they want to defend price and push it lower towards that demand zone. So that's what price did here. It tapped into that supply. We have this local, let's delete this to make it a bit more clear, height. We have this local range developed during Asia. It's called range. Then we had local exhaustion, 1, 2, 3, aka local distribution. So I was looking at this from a potential manipulation play, in which we have manipulation, distribution, expansion right here. So local PO3 idea, I can still see it playing out because we also have a lot of local sell side liquidity built up. So usually once you start breaking back in the value area, which price did, then you should see a pretty quick and easy rotation back lower, because also here there is not really any demand unless until this range low demand right here. But till there you basically only have lows building up. So it could be a quick rotation, but as I also mentioned to the group, we have FOMC later today. So I will not be surprised either to see price just chop around in here. But either way, if we get a bearish continuation, then I will make nice profits on that short. Else I will get stopped out in profit. So a win either way. By the way, everything I do is shared in this in the mastermind. You can see me explain all my thought processes right here. Also the order flow, daily statistics here, when I take a short, if I take it, why I take it, basically anything. The confluences I saw with USDT dominance that tapped into some demand, local accumulation, breaking 1 minute structure, and a lot of liquidity resting above. So nice confluence with PTC expecting lower prices. So yeah, let's see what happens. I'm not planning to take new trades before FOMC because I said I expect price to chop around. So I'm basically waiting for this low to be hit or that short POI higher to be hit. And beside that, I'm not really interested in trading anything. To end it, I want to quickly go at the order flow. How is it looking? Well, we basically have this range where this is our range high, this is the range low. And last week I mentioned that we had levels on both sides. So right now we can see we have a point of control untested right here. We have a poor low right there. We have yesterday's point of control above. But we had a lot of these things on the upside. But since we took range high liquidity, all that upside, let's call them magnets, are taken out. So if you look purely at a liquidity perspective, where are the levels that act as magnets for the market makers to rebalance price? Currently, they are on the lower side. So yeah, also based on that, I expect, even if we first move up, a lower high to eventually target all this liquidity resting lower. Also, if we look at, yeah, like a lot of longs entered during the weekend, they all got wrecked with that move down yesterday. Currently, quite a lot of longs are entering again in the market. They are not yet wiped out. So let's see, shorts are not that aggressive. Perps are selling and spot. Yeah, we had quite a lot of ETF inflows yesterday, but yeah, they got rinsed pretty quickly. So yeah, let's see. For the order flow, I would look at yesterday's point of control, which is still untested as a potential level for reversal in combination with that fresh created supply. Then we have a fair value gap right below today's low and a poor low. So that's basically that aligns with that do or die zone on PTC, which is this demand zone. So if we move into this and we see local absorption or at least don't close below this level, it could offer a potential longs into this area where I'm looking for shorts. Basically because we have a super strong weekly high, a weak weekly low. So yeah, I expect a lower high for potential lower lows until proven otherwise. So yeah, let's see what happens. For now, trade safe because we have FOMC. Tomorrow we have Trump speaking. So yeah, happy trading and thanks for watching once again. And don't forget to leave a like if you like the content. Thanks for watching and cheers.